Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now, Bitcoin is officially breaking down while a new signal is flashing in the short term, which I'll talk about in just a moment, while Ethereum is now running into critical support before potentially the next major price target, while Solana is now bouncing from critical short-term support. So I'll be talking about all of that and so much more later in the video, so definitely watch to the end. First of all, just before getting into the Bitcoin charts today, taking a quick look at the Bitcoin ETF news today. And on Tuesday, we saw another net outflow, this time a net outflow of around 161 million US dollars. And so this basically means the Bitcoin ETFs are still currently dumping Bitcoin on the market, which is one of the reasons as to why we're seeing a bit of short-term bearish price action at the moment. And also just recently, we just had an FOMC meeting, also known as a Fed meeting, and the Federal Reserve basically kept interest rates the same, which was the expected outcome. And so the interest rate decision itself did not really have a major impact on markets because once again, the interest rates did not change and everyone was already expecting that. And also, if we're looking at the probabilities for future Fed meetings, we can see the next Fed meeting happens in around the middle of June. And as of right now, almost everyone in the market is also expecting for the Federal Reserve to keep interest rates at the same level at that next Fed meeting in June. And as for changes in interest rates, right now, the majority in the market is expecting the next change in interest rates to happen somewhere around September or November. Basically, later this year, once again, the market is indeed expecting an interest rate cut, just one interest rate cut based on what the market is currently pricing in. And then as of right now, the futures market is also pricing in another interest rate cut. By the way, both of those interest rate cuts are 25 basis points, so reducing interest rates by 0.25%. And that second interest rate cut that the market is pricing in, that the market is expecting that to happen around January next year. And now, even though the interest rate decision at the latest Fed meeting did not really affect markets all that much, because once again, that was the expected outcome, but we did see the market react to the Jerome Powell press conference right after the latest Fed meeting decision, because during that Jerome Powell press conference, we actually saw the market bounce back to the upside due to the press conference looking relatively dovish, aka bullish. And basically, one of the main reasons as to why the market bounced during the press conference, why the press conference was considered bullish for markets, was basically due to the fact that Jerome Powell said that there's pretty much no chance we're going to see any more rate hikes, and instead we're looking at potential rate cuts at some point in the future. And on top of that, the Federal Reserve is looking to taper their quantitative tightening, which basically means getting rid of their quantitative tightening, and QT is considered bearish. So when you taper QT or get rid of QT, that is considered bullish. And so once again, due to those reasons, we actually saw a slight bounce just in the short term right around that Fed press conference. But if we're looking at this 3-day Bitcoin chart, we can see the price of Bitcoin is still currently trading below, at least at the time of recording this video, trading below this Fibonacci level, which is sitting right at around $60,000. And this next 3-day candle close confirms in around 1 day from now. So basically, if we see that 3-day candle close confirm below 60,000, then obviously that would not be a good sign on this chart. Because basically, if we confirm a break below that 60K level with confirmation, like candle closes below that level on larger timeframes, then in that case, the next major level of support to the downside would be this 38.2% Fibonacci level, sitting right at around 51 to 52,000, once again, as the next major support. And so essentially, if we further confirm this break below 60K with strong candle closes on large timeframes below that level, then expect a move potentially down to those lower 50K prices. But if we're taking a look at this 3-day Bitcoin chart, we can see, at least as of right now, this pullback from high to low is still kind of on par to previous pullbacks that we've seen throughout this very bull market. And also, if we're looking at previous bull markets, like for example, the 2017 bull market, we saw multiple 30 to 40% pullbacks to the downside during that bull market. And so it's important to understand that just because we see a 20 or 30 or even 40% pullback from high to low, that does not necessarily mean the bull market is over, as we've seen in the past. And so as I always say, it's important to understand the difference between the different time frames. Yes, in the shorter term, we can look more bearish, but on the larger time frames, looking at the bigger picture, it's still possible to remain within the larger bullish trend, forming higher lows and higher highs, even if we see some short-term bearish price action here and there. And if we're taking a look at this daily Bitcoin chart, as of right now, the DXY is basically chopping around sideways. Over the last couple of days, it did have a major spike to the upside, and with the latest Fed meeting, due to the things that were spoken about in that latest press conference, we did indeed see a drop back to the downside in the DXY just recently, which also coincided with that slight bounce here in the price of Bitcoin. But if you want to know more about the DXY and this chart right here, then check out my last video here on the channel, because in that video, I went into much more detail about this chart right here. And if we're taking a look at this daily Bitcoin chart, as of right now, the price of Bitcoin is potentially about to confirm a break below this line of support, which is actually sitting at around 59,000, considering it's a descending line of support. But at least at the time of recording this video, we have not yet confirmed a daily or a weekly candle close below 59,000. So keep that in mind. At least for now, it's still a possibility that we could still hold above that level if we see candle closes back above that level. But basically, right now, the price of Bitcoin is on the very edge of potentially confirming a break to the downside here on the daily time frame. And once again, if that actually happens, then that would potentially invalidate this potential bullish divergence which was forming but never actually confirmed, because to confirm that pattern, we need to see a breakout above this resistance, which is sitting at around 71,500. And if we're zooming further into the short term, looking at the 2-hour Bitcoin chart, as of right now, the price of Bitcoin is actually starting to play out a new bullish divergence here on the 2-hour Bitcoin chart. Because as of right now, the price has already confirmed lower lows in place in the candle closes, while the RSI on the 2-hour time frame has just confirmed higher lows. And so once again, at least at the time of recording this video, this bullish divergence is actively playing out and is most likely going to play out over the next 1 to 2 days or so as the most likely scenario. And often these bullish divergences, they usually play out in the form of either a sideways consolidation or a slight bullish relief in the short term as the most likely outcomes. And so due to this reason, personally, my short-term trading strategy right now is actually starting to scale into a new Bitcoin long position. And it's important to understand that at least as of right now, it's a relatively low leverage position, and I do have more buy orders to the downside. So let's just say if we continue this pullback further to the downside, then that would simply trigger more buy orders to the downside, basically scaling further into that position and lowering my entry price, basically getting a better entry and a bigger trade for that trade. And as always, none of that is personal financial advice, because I don't know your personal financial situation. I'm just sharing my trading strategies right now. And in case you're wondering, personally, I take those trades over on Bybit, so I'll make sure to leave a link to Bybit in the description down below and in the pinned comment. And in fact, if you use that link down below this video to make a Bybit account and deposit on that account, then you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, if you use that link, it will take you to this page right here where you can claim an exclusive 200 USDT airdrop position. But you can only claim this free airdrop if you actually use the link down below this video to make a Bybit account. And so if you're going to be trading crypto anyway, you might as well check this out. Once again, first link down below this video if you want to claim these extra bonuses. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And so I'll also make sure to leave a link to Bitflex down below this video as an alternative crypto exchange. And if we're taking a quick look at the Bitcoin liquidation heat map, we can see we've just taken out a little bit more liquidity to the downside, but we still have the major levels of liquidity to the upside. And so it is still quite likely that at some point in the future, the price of Bitcoin is likely going to return once again at some point in the future up towards these higher prices at around 67,500 and around 71,500, and also more liquidity at around 73,000. And basically, the moment the price of Bitcoin even just crosses above this level right here at around 67,500, then in that case, billions of dollars of short positions will get liquidated. And so once again, if the price of Bitcoin crosses above those levels, expect major liquidations in terms of short positions, which could actually send the price a lot higher once we cross those levels. But anyway, taking a look at the Ethereum part of this video, this is on the weekly time frame. And if we're taking a look at the Fibonacci retracement tool on the linear settings from the bear market low up to the latest local high, we can see that right now the price of ETH is running into the 38.2% Fibonacci level of support, which is sitting just below 2.9k, more specifically around 2860 to 2870. And basically, if we confirm candle closes on larger timeframes like the 3-day chart or the weekly chart below around 2.9k, then in that case, we could likely see a move down towards the next major level, the next major retracement level, which is the 50% retracement level sitting at around 2,500. And so once again, if the price cannot hold 2.9k, expect a move to 2.5k if we first confirm a break below 2.9k, which as of right now has not happened. And if we're taking a look at the daily time frame, we are still potentially forming this massive falling wedge pattern because as of right now, the price has not yet confirmed a break either below this support line or above this resistance line. And right now, this line of support is sitting at around 2890, so also right around that 2.9k level, which is an important level on the chart. And this resistance is sitting at around 3.3k, which is the level we need to confirm a breakout above in order to confirm the bullish price targets for this pattern. And if we're zooming further into the short term, looking at the 8-hour time frame, we can see right now the price of ETH is actually bouncing from this critical area of support, which is sitting in between around 2850 to 2950. And so once again, I've been talking about this exact area of support over and over again here on the channel. And once again, we are finding a lot of support in that exact price range as expected. And this is also coinciding with the RSI entering into oversold territories on the 8-hour ETH to US dollar chart for the first time since around the middle of April. And the time before that was right around the 19th of March. And if we're taking a look at the price of ETH at both of those times where the RSI entered into oversold territories, that happened right before a bounce back to the upside, at least in the short term. And now it's important to understand that this does not necessarily mean we've definitely hit the bottom for the pullback like what we saw back here. We ultimately went a little bit lower later on. But at least in the much shorter term, talking about the next couple of days or so, we're most likely going to see at the very least a sideways consolidation or most likely actually a bounce back to the upside. Basically, I'll not expect a massive move to the downside just over the next 1 day or so, because once again, that's simply based on the RSI already hitting those oversold territories and now resetting back to the upside, causing the price to bounce back to the upside. And also we are bouncing from strong support. And if we're taking a look at Solana on the 8-hour time frame, we're seeing almost the exact same thing for Solana as I just said for Ethereum on the 8-hour time frame. Basically, the price is bouncing from this exact area of support that I've been talking about over and over again here on the channel in between 120 to 128. And we are also bouncing from those oversold territories here in that 8-hour Solana RSI, like what we saw previously. If we're looking at the last time this happened, we saw a bounce back to the upside in the price, both here and here at both of those times where the RSI entered into oversold territories. And once again, this signal by itself does not necessarily mean we've definitely hit the bottom and we're going to have no more bearish price action. It does not mean that. But what it does mean is just in the short term here, as in talking about the next day or so, maybe the next few days, it's unlikely we could go a lot lower. That's not impossible, but that is unlikely. And what is most likely going to happen is, once again, just a sideways consolidation with the price stabilizing in the short term over the next few days, or potentially a bit more of a bounce back to the upside just in the short term, once again, just over the next 1 to 2 days or so as the most likely outcome. And when it comes to support and resistance, we have this area of support further to the downside in case we actually confirm to break below 120. Then in that case, we have another area of support in between 99 to 106. And we also have this area of support that I just mentioned. And for resistance, we have this area sitting in between 150 to 155 with more resistance at around 160. And if we're also taking a look at this descending line of resistance right here, we could also find some resistance at around 145. So just keep that in mind. And if you want to trade these moves in the price of any crypto, once again, check out those links down below this video if you want to claim those extra bonuses. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, you can profit from all of that price action by watching these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.